If you earn £110,000, you are paying the highest rates of income tax in the UK. It is an unofficial 60% tax rate that is not recognized by HMRC. So a lot of people end up paying it without realizing. In this video, I will explain how the 110k tax trap works and easy things that you can do to avoid paying this hidden 60% tax and keep more of your money. Hi, I'm Sabina. I'm a chartered certified accountant with 10 years of experience, and on this channel I share knowledge and strategies about finance, entrepreneurship, and self-development. Let's start by understanding the UK income tax thresholds and tax rates. When you earn a salary, you have to pay income tax, and the more money you earn, the more income tax you have to pay. That means that when your salary is, for example, 110k, your take-home pay is only 77k, and the difference, which is 33k, is the income tax that you pay. That means that the first 2 hours of your workday goes towards paying taxes. Let me explain how it works. You can earn a tax-free amount known as the personal allowance, which is £12,570, and that means that you can earn that much without paying any income tax on it. Then there are 3 income tax bands, and the tax rate gets higher as your income gets higher, and you fall into those bands. They are basic rate tax band, which means that you have to pay 20% tax on anything that you earn from £12,571 to £50,270. Higher rate tax band, which means you have to pay 40% tax on anything that you earn from £50,271 to £125,140. Additional rate tax band, which means you have to pay 45% tax on anything that you earn over £125,140, and you no longer have the right to earn any untaxed income. But there is an unofficial 60% tax rate that people are not aware of if you earn between £100,000 and £125,140. And that's why earning 110k or anything in this bracket will make you worse off, because you will pay a lot more tax. Let's have a look at how it works. Number 2, the 110k tax trap. When you earn between £100,000 and £125,140, it means that you are in a higher rate tax band. As a higher rate taxpayer, you have to pay 40% tax on anything that you earn from £50,271 to £125,140, which I spoke about earlier. But once you start earning over 100k, your personal allowance of £12,570, which is the amount that you can earn tax-free, gets reduced. And for every £2 you earn above 100k, your personal allowance will go down by £1. That means that between 100k and 125k, an unofficial effective tax rate is 60%. Let's say your income is 110k. You will pay 40% tax on this 10k above 100k, which is £4,000 tax. You will also lose 5k of your personal allowance and will have to pay 40% tax on this 5k too, which is an additional £2,000 tax. This means that 10K of earnings will cost you a total of 6K in taxes, which effectively is 60% income tax rate. Number 3, how to avoid paying the highest rates of income tax in the UK. The easiest way to avoid the 60% tax rate is to avoid a salary between £100,000 and £125,140. However, a growing number of people are falling into this 100K tax trap because of frozen tax thresholds and the increase in salaries over the last few years. But there are things that you can do to avoid it, which I will talk about next. The first thing that you can do is to increase your pension contribution to bring down your taxable salary to 100K. This is when your pension contribution will be deducted from your gross income before your salary is taxed. For example, if you earn 110K a year, you can choose to pay 10K into your pension, so income tax is calculated on 100K. That way, you will avoid paying that effective 60% rate altogether. And that means that you are paying less tax today and you are saving more money for your future. Let's look at the example. Let's say that you are earning £110,000 a year and you don't pay anything into your pension. You will pay income tax on the full £110,000 salary. You would pay 20% tax on £37,700 of your income, which falls into the basic rate tax band. Then you would pay 40% tax on the remaining £59,730 of your income, because that's the proportion that falls into the higher rate tax band. And then you would have to pay 40% tax on an additional £5,000, which is the amount of the personal allowance that you would lose on the £10,000 you earned above £100,000. Your income tax will be £33,432, leaving you with £76,568 take-home pay. If you decide to contribute £10,000 into your pension, this amount will be deducted first from your 110K salary, and you will pay income tax on £100,000. Your first £12,570 will be tax-free because it's covered by your personal allowance. Then you would pay 20% tax on £37,700 of your income that falls into the basic rate tax band. And then you would pay 40% on the remaining £49,730 of your income, because that's the proportion that falls into the higher rate band. Your income tax will be £27,432. Your take-home pay is reduced. It will be £72,568, but you will also have £10,000 saved for your future, which has gone to your pension. That's £6,000 tax savings, which means you end up with more money for yourself and less money paid to HMRC. The second thing that you can do is to use your workplace salary sacrifice schemes to reduce your taxable income to 100K. This is when you agree to give up part of your salary in exchange for certain benefits. For example, to buy additional days of leave or an electric vehicle. It works in a similar way to pension contributions, where the cost of a car, for example, would be deducted from your gross salary before you pay income tax. By using a salary sacrifice, you end up agreeing to lower salary, but you avoid 60% tax on the part of your salary that you sacrifice. So you could end up with more money at the end of the month. If you learned anything new from this video, then please subscribe to my channel and let me know in the comments below if this hidden 60% tax rate surprised you. If you enjoyed this, you will also like this video on the 6 simple ways that you can reduce your taxes without the need for any complicated tax planning. I will see you there.